Right, welcome to my first ever video on YouTube. Obviously, just a quick introduction about myself. So my name is Excel. I've been trading for 2 years now, trading here and there, and I trade only smart money concepts. And this channel basically is going to be talking about smart money concepts. So I'm going to be pouring every knowledge I know over the years that I've learned over the years about smart money concepts. So basically, I'm going to be documenting everything I've learned about smart money concept onto this channel. So if that sounds like something you're interested in, kindly subscribe to the channel and smash that like button. Obviously, get me to 100 subscribers because this is actually my first video. 3 subscribers, but we move. Anyways, now we're gonna be talking about market structure, right? Now, market structure is like the foundation of your trading. You need to understand market structure. If you don't know market structure, you're probably gonna lose, bro. Sis, girls and boys. If you don't know market structure, your trading is not complete. So we need to understand market structure. So in this video, I'm just gonna walk you through market structure, how to mark your higher highs and higher lows, how to mark your lower highs and lower lows. So from the picture, from the diagram you can see here, this is just a textbook format of market structure, right? This is how the textbook says market structure. So in an uptrend, we see that in an uptrend, price tends to create price tends to make your higher highs and higher lows, which creates a break of structure. So what we see here is a push phase. We have in the market structure, there are two things to identify, right? A push phase and a pullback phase. 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 So your push phase always gives you a V-shaped reaction and breaks the previous pivot point, which gives you a break of structure. So we're just gonna quickly mark that on the chart just so you guys can understand what I'm saying, right? Right, so we are currently in a push phase, yeah? So price pushed, get us our pullback phase, creating our what? Our break of structure to the upside, right? Actually, let me not even draw this just to make it simple. So this is your higher high, higher low, break of structure onto the upside, higher high, higher low. We have our break of structure onto the upside, and we've got our higher high, higher low. We've got a break of structure onto the upside. Our next higher high, higher low. Our next break of structure onto the upside. So we have identified our break of structure here. So relatively simple, relatively easy. Price gives you your push phase. After the push phase, it gives you your pullback phase. A pullback phase is just a simple retracement to facilitate the break of structure. So push phase, pullback phase, then break structure, breaks the previous V-shaped reaction. Same onto the next one, push phase, pullback phase. The next push phase should break the previous V-shaped reaction. So push phase, pullback phase, push phase. The next push phase should break the previous V-shaped reaction, which you see here. So push phase, pullback phase, then push phase. The next push phase should break the previous V-shaped reaction, which you see here. So relatively easy, relatively straightforward, right? Pretty basic, pretty simple because it's a textbook format. And we're just gonna do the same thing, but in a on a downtrend. So in a downtrend, same explanation. In a downtrend, the market tends to make your lower highs and lower lows, which creates a break of structure to the downside, right? So this is your high and your low, and the next thing we should be anticipating is our lower high, which is here. So that lower high will create a push phase, giving us our break of structure, our first break of structure onto the downside, right? As we can see here for the next one, which is giving us our lower high, lower low, break of structure right there. Lower high, lower low, break of structure right there. Lower high, lower low, break of structure right there. So in summary, price, right, will give you two things to identify really is your push phase and your pullback phase, your push phase and your pullback phase. That is what I like to call it. Price is pushing, meaning that price is currently in an impulsive state. If price is pulling back, meaning that price is currently in a retracement state. So a retracement is only lasts for a small amount of time, right? It doesn't last for too long sometimes. But so price gives us our push phase, pullback phase. The next push phase should give us a break of structure to the downside. Gives you a pullback phase. The next push phase should give us a break of structure to the downside. Pullback phase. The next push phase should give us a break of structure to the downside. Pullback phase, push phase, the next push phase should give us a break of structure to the downside. One thing to note now is if price doesn't break structure, it means price is just consolidating. Simple as that, right? If price is, for example, right, if price is just moving like this, boom, 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 and it's just stuck in this box right here, right? It's just stuck in this box right there. It means price is just moving in a consolidation format, and we don't trade consolidation on this channel. And I don't trade consolidation around here. Until price gives me some type of break of structure to the downside or to the upside, I'm not trading in this box, right? So if price gives me a break of structure to the downside right here, what am I anticipating next? I'm anticipating price to pull back to break the next break of structure right here. So giving us a break of structure right there. So then we can mark our next break of structure here for relatively easy. If price hasn't broken any structure in this box, we are simply in a consolidation and we are not trading. We abstain out of the market. So this is literally your textbook format. As you can see, relatively easy, relatively straightforward. Nothing too techy with this one because this textbook is easy to see, easy to understand. But in the reality of it, if we just scroll down here, this is the real market structure, right? This is the real one. This is the reality of it. So same thing again, in an uptrend, the market tends to make higher highs and higher lows, which creates a break of structure to the upside. So starting again, like we said in the textbook format, price will give you your push phase. Price will give you a push phase, then pullback phase, right? But now, this is where it gets exciting, very, very interesting, right? Now, we know that we are in a push phase. Right, we know that we're in a push phase. This is the last point where the push phase ended, and now we have already pulled back here, right? So was this, we're looking now, the next thing we need to check with this area here, we need to look for the last point that broke structure. Was it this point that led to a break of structure to the upside? No, it wasn't. Was it this point that led to a break of structure to the upside? Yes, it was, because we can see that from here, from this point here, that was what created the break of structure to the upside, right? So this will indicate as our valid higher low. If you put, say for example, you put your last higher low there, that is an invalid higher low, just so you know. If you've been doing that, if you have been marking up your chart like that you have been marking it the wrong way, right? You have to mark the point that led price to breaking the previous V-shaped reaction, right? Which is this point here. So then we're going to come through and mark up the break of structure right there. Onto the next. So now we can see that price is giving us our push phase here. Push phase ended right there, now giving us our pullback phase. So this is the last point price stopped in the push phase. So now we now want to identify where price pulled back to. The last point price pulled back to. Is it here? No, it's not. Is it here that caused the break of structure? No, it's not. Is it here? No, it's not. Is it here though? Yeah, it is, because this point led to a break of structure, led to price breaking this previous V-shaped reaction. So this is our valid higher low, which created a break of structure to the upside. Next one, push phase ended at this point here. So relatively easy for this one. Was it this point that led to a break of structure? Was it? Yeah, it was, because this point created this point caused price to break the last V-shaped reaction. So we're going to come through and just mark the break of structure here to the upside. Relatively the same thing for the next one. Push phase. Trade ended right there. And now we need to identify the point that broke the most recent break of structure. Was it this point? No, it wasn't. Was it this point? No, it wasn't. Was it this point? Yes, it was, because this point caused price to break structure to the upside, right? So then we're going to come through and mark this as our valid break of structure. Now, just again, you have to kind of mark out the point that caused break of structure, because if you mark, like I said before, if you mark this point, these 2 points here, you are on the wrong side of the market, my friend. You are on the wrong side of the market, because if you, for example, you want to take a trade from here, right? And you say, okay, this is my last, and you say, cool, this is my last lower high. So I want to take a trade from this point here to the upside. So you want to take a trade now. Take a trade. You obviously target your last supply, your last supply here to the upside. You target the last pivot point to the upside. Let's just to draw it for you beginners. Let's say you're targeting this area here. Right, you're targeting here. Right, relatively easy. Guess what price will happen? Just because you don't have the understanding of market structure, and you thought that this area here was your last what do you call it? Your last higher low. Price will come through and stop you out. Then after stopping you out, it's gonna go in your way, and that is the most frustrating thing to ever see in a market structure. Trust me, I've been there, experienced it, done that. So this always mark the point that led to breaking the recent V-shaped reaction. If that point doesn't create a break of structure, then that is not your valid higher low or your valid lower high in the downtrend perspective, right? So onto the next, we're just gonna onto the downtrend format. Just so you guys know, my favorite trend is the uptrend, up, because I want to be going up, right? But in terms of the price, you have to be able to adapt. I said adapt. You have to be able to adapt what price is doing. But anyways, that being said, onto the downtrend. So same thing again. In a downtrend, the market tends to make lower highs and lower lows, which creates a break of structure. Again, the same thing as we identified in the uptrend, right? So this is our high, low, lower high, lower low. Now that lower high created a break of structure, right? Again, was it this point that led to a break of structure? No, it wasn't. Was it this point? And that's no, it wasn't. Was it this point? Yes, it was, because we can see that from this point here, price broke structure from this point here. So that is our valid lower high. Always mark at the point that created a break of structure to the downside or to the upside. Oops. Anyways, the next one. So we can see that price has now given us our push phase. Next phase is a pullback phase, which is here. So oops. This is the pullback phase. So this is your lower high, lower low, lower high, lower low, which created a break of structure to the downside. Okay, right there. So again, just to make you guys understand, was it this point that caused the break of structure? No, it wasn't. Was it this point? Yes, it was, because from that point, that was when price went down to break the last V-shaped reaction. So that is our valid. This is our valid lower high. Right, on to the next. So lower low. Was it this point? Excuse me. Was it this point that led to a break of structure to the downside? No, it wasn't. Was it this point that led to a break of structure? No, it wasn't. Was it this point though? Yes, it was, because as we can see here, we can see that price gave us a pivot shape reaction here, which created a break of structure to the downside. So this is our valid lower high. So we can come through here, and kind of mark it on the chart here. Right, ready. Next one, right? So we can see that price is now creating our lower low. Is this our lower high? No, it's not. No, it's not. Is this our lower high? No, it's not. Is this our lower high? Yes, it is, because from this point led to a break of structure to the downside. So this is our valid lower high. This is our valid lower high. So we're going to come through and mark that as our valid break of structure to the downside. So relatively easy. This is how price moves in real time. Like in reality, this is how price moves. It moves like this, and it's so you have to kind of understand the points to mark, just so you don't mark the wrong points, right? Again, if price is moving like this, for example, and hasn't breaking any type of structure, what are we in? We are simply in a consolidation, and we are staying out of the market. But I really don't trade consolidation. But until price breaks out from this consolidation, creating a break of structure to the upside, to the downside, or to the upside, then we can come through and mark this area as our break of structure to the upside. But then again, you want to ask yourself, okay, this is our higher high. Where is our higher low? Is it this point? No, it's not. 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 Is it this point? Yes, it is. Because from this point this was this point that led price to break out from this consolidation. So that is your valid higher low. Always mark the areas that led price to break structure. It's not gonna, because if you mark the wrong area, you're simply marking an invalid higher low. In terms of a downtrend, you're marking an invalid lower high. So that being said, we're going to move on to the chart and show you guys how mark up your charts on the row charts. To mark up your charts on the charts. What am I saying? To mark up your charts. Literally. Okay. So let's go ahead. Oh, just a quick note. There's a simple in due course we're gonna bring out another video as we progress further. We're gonna bring out a video regarding supply and demand and how you can trade consolidation using supply and demand. So I'll speak about that later on in due course as this channel progresses. Right. So obviously this is the first video we're dropping in it. So we're gonna let's dive into the real chart anyway. So this is the chart on Australian dollars. I mean AUD USD. So we're gonna mark up. We can see actually let's mark it up on the 1 hour time frame just to give us a precise chart. Right now we can see that price is in an uptrend. If you can't see that already, we can see that right now price is in an uptrend moving towards the upside. Right now this is how I like to kind of identify the charts. I want to see where is price moving to. Is it moving to the downside or is it moving to the upside? But as we can see here, we can see that price is in the upside. We've already established that, so now we're going to see this was the last place that broke structure to the downside. Right, this was the last place that broke structure to the downside. Then price came through and gave us a change of character, also known as a market shift to the upside. In due course, we're going to speak about change of character as the video progresses, but for now we're going to focus on market structure, how to mark up your charts and all of that. So on to the next. Now we want to identify the next break of structure to the upside. So you can see that price is coming through to create our higher high, higher low here, creating a break of structure to the upside. Right there. Just to emphasize as well, if you get a weak break, right? Now, how do we identify a break of structure? Just so you guys understand, right? We need to see the candle close above the previous candle. So for example, right, just to zoom in so you guys can see, for example, if we get a weak break, we are not counting that as a valid break of structure. The body of the candle has to close above the previous the previous higher high or the previous lower low in a downtrend perspective. So always the body has to close above it, and that's going to indicate a valid break of structure to the upside. Right, so the next one, just to put that out there, because you don't count a weak close as a break of structure. Is wrong. It might just be a liquidation, which we're going to talk about in due course as the video progresses again. Now on to the next. We can see that price is coming through here to create your next higher high, higher low, creating a break of structure to the upside. Again, what are we looking for? We are not looking for a weak close. We are looking for a body close, not a weak close, a body close. On to the next. Now onto the next, we can see that price is creating our higher high, our higher low. As we can see here, just right here. Now, this is a good example, right? This is our higher high, and this is our higher high, right? Now, is this our higher low? No, it's not, because this point here didn't lead price to break structure, right? Is this our higher low? Yes, it is, because from this point, it was from this point that led price to break structure onto the upside. So always check the points that led to a break of structure to the upside or to the downside. If this point doesn't lead to a break of structure, it is not your valid lower high or your valid higher low or your valid lower high. Right, so we're going to come through and mark this up here as our valid break of structure to the upside. Now, I don't really count this as a pullback phase, so we are currently still in a push phase till we see a massive pullback right here. Right, so this is our valid pullback phase here. So we're going to come through and mark our higher high. Is this our higher low? No, it's not. Is this our higher low? No, it's not. Is this our higher low? Yes, it is, because from this point led to, actually, no, it's not. My mistake. No, it's not. No, it's not. It was from this point, right? It was from this point that led to a break of structure to the downside, to the upside. So this is our valid higher low to the upside, creating a bullish break of structure. Always a body close, not a weak close. We are looking for a body close to give us a break of structure. On to the next, right? Higher high, higher low. Was it this low? Was it this higher low that led to a break of structure? Yes, it is. But then again, this is a massive wick break. This is a wick break. This is not a body break. We are looking for a wick break. So really and truly, we are looking for a wick break. So I said a wick break. We are looking for a body close, right? Just give me a minute, guys. I kind of zoned out there. So this is our higher high, and this is our higher low. Now, where is that break of structure? Our higher high is here, and this is our valid higher low, because this low kind of led to a break of structure to the upside, right? So we're going to come through and mark this as our break of structure. You see what I said? It's kind of difficult to mark the chart on a real time, but on a textbook format it's easy, isn't it? Or you come to the chart, get confused. Anyways, as we can see here, we can see that right here price is consolidating. Now me personally, we are not trading this type of trend, because price is in the middle of nowhere. It's doing nothing until price gives us a break of structure to the upside, which will continue the uptrend, or give us a break of structure to the downside, indicating a change of character to the indicating a change of character to the downside. Then we can trade with the trend. But if price is still in this box, we are not trading. So relatively easy, relatively straightforward. We are gonna come through and yeah, and that's it for the uptrend, really, because that's it for the uptrend. That's how you mark the chart in terms of the upside. So now we are going to look for another example for the downside. Oh, this is a good example here. I'm going to come try and replay a little bit. Okay, replay. Boom. I'm going to come through here, kind of, boom. Cool. Right, cool. Now, I see that right here, downtrend, price is making your lower highs and lowers low to the downside, creating a break of structure. So we are currently in a downtrend. Now, what do we want to do next? We want to mark up our market structure. Always mark out the market structure before proceeding to trading. mark up the market structure. In terms of smart money concept, you need to mark up your chart so you can understand and kind of see where price is going, right? So we can see right here, price was previously creating your lower high, your higher high and your higher low, higher high and your higher low. And we can see that right here, price didn't break the previous higher high to the upside. So this kind of gave us an indication that price is pushing down to the downside, right? So then we're gonna come through. Oops. We're gonna come through and mark this, right? So high, low, lower high, lower low, and that created a break of structure, our first break of structure to the downside. By the way, did I even say that? By the way, the black candles is bullish and the gray candles is bearish. I don't think I said that before I started, but the black bullish, the gray bearish. So anyways, that being said, so we can see right here another example, right? Is this the point that led to a break of structure to the downside? No, it's not. Is this the point that led to a break of structure to the downside? Yes, it is, because we can clearly see here that from this point, price pushed down and created a break of structure to the downside. So that is our valid lower high. The push phase creating a valid of our lower low, then lower high. Again, is it the point that led to a break of structure to the downside? No, it's not. Is it this point that led to a break of structure to the downside? No, it's not. Is it this point? Yes, it is, because this point created a break of structure to the downside. So we're going to come through, mark a break of structure, a bearish break of structure to the downside. Next, we're going to come through. This is our push phase. So this is where our push phase ended. So next thing, we want to identify our lower low, and now we want to identify our lower high. Was it this point that led to a break of structure? No, it's not. Was it this point that led to a break of structure? No, it's not. Was it this point? No, it's not. Was it this point? Yes, it is, because after this point was created, price then pushed down to the downside to create a break of structure to continue the bearish trend. So this was the valid point. That is our valid lower high, I meant to say. So we're going to come from market our break of structure right there. Our break of structure right there. I'm going on to the next, and we can see that price is still creating our lower low, lower high, lower low, creating a break of structure to the downside. If you guys don't get it already, we can see that price was at this point that led to a break of structure. No, it wasn't. Was it this point that led to? No, it wasn't. It was this point that price pushed down to create a break of structure, to the downside. Okay. So now we can see after price created a break of structure, we can see that price is currently in a consolidation right here. See that price is in a consolidation format. Now, until price breaks this consolidation to the upside or to the downside, we are not trading it. We are waiting for price to kind of break through this consolidation, which it done here, right? It broke it. Now, again, we are asking ourselves, was it this point that led price to break the consolidation? No, it wasn't. Was it this point? No, it wasn't. Was it this point? No, it wasn't. Was it this point? Yes, it was, because this point led price to push down and create a break of structure to this point led price to break structure to the downside. So we're gonna come through. We're gonna come through and mark out our break of structure. Sorry guys, that was just mark out. Yeah, gonna come through, mark our break of structure to the downside. So this is our break of structure to the downside. Right. This is how we mark up your chart. Now, a change of character until price breaks this valid lower high, we are still in a bearish momentum, right? And so price breaks the valid lower high, we are still in a bearish. So let's come through and see. So you can see here that price kind of breaks the valid lower high with a body close. Always a body has to close. You can see right here a body close, right? A body close, indicating the market shift indicating the change of character, also known as market shift, right? I like to call it a market shift, right? Because it's simpler to understand and simpler to remember. But anyways, so price gave us a market shift to the upside, indicating a change of character. The market shift to the upside, indicating that price is about to go up and skyrocket to the moon, right? So we're gonna play price forward and see, out of curiosity here. So you can see the moment price broke the last lower high, it just indicated to us that price is going to go up, and that is literally what's happening. So you can see from this video how market structure is the foundation of trading. Literally, if you don't understand market structure, you're probably going to lose in your trading game. You need to understand market structure before you move on to anything else, right? Before you move on to supply, demand, liquidation, all of that, you need to understand market structure. So hope this video have helped one or two people. If you have any questions, leave it down in the comments and I'll get to it. Next video I'm going to be dropping as this video progresses. Again, if I get to a certain level, then I'm going to drop a video on supply and demand and liquidity concept, order block, how to trade order block properly, how to identify supply and demand properly, how to trade them. So this video is this channel is basically going to be talking about that as well. So literally, if this video have helped anyone, make sure to smash the like button and subscribe to the channel. Basically, again, I'm going to be documenting everything I know about smart money concept on this channel. What am I documenting again? I'm going to be documenting everything I know about trading, about ICT and smart money. Actually, just smart money concept, because I trade more of smart money concept, right? So I'm going to be documenting everything about smart money concept on this channel. I'm going to be pouring all the knowledge for free on this channel. So if that's something that you want to see more of, make sure to subscribe to the channel and like, to motivate me to keep on, putting more videos out there for you guys to watch and make your trading better. But that being said, if you enjoyed the video, again, smash the like button and I'll catch you in the next one. Peace.